Crises have a way of separating the bold from the timid. While most people panic, sell, or freeze when markets collapse or industries falter, top investors see something different: opportunity. The biggest fortunes in history weren't built during calm waters. They were forged in storms, recessions, and chaos. Today, we're diving into the untold stories of investors who didn't just survive crises, they turned them into multi-billion-dollar opportunities. These are lessons not taught in textbooks, and they reveal a mindset, strategy, and courage that separates ordinary investors from legends. One of the most famous examples is Warren Buffett during the 2008 financial crisis. While markets plunged and fear gripped Wall Street, Buffett saw value where others saw despair. He invested billions in companies like Goldman Sachs and General Electric, acquiring stakes at discounted prices that would later yield extraordinary returns. The key lesson: crises are opportunities to acquire undervalued assets if you have the knowledge, patience, and courage to act. Buffett didn't panic. He prepared, assessed intrinsic value, and deployed capital strategically. Ordinary investors often sell in fear, but the pros understand that market downturns can be fertile ground for long-term gains. Ray Dalio, founder of Bridgewater Associates, approached crises with systems and principles. Dalio built his all-weather portfolio to thrive regardless of economic conditions. During the 2008 crisis, his strategies mitigated losses while capturing unique opportunities. He studies patterns of boom and bust to anticipate where capital should be allocated. The lesson here is that preparation and systemic thinking are crucial. You can't predict every crisis, but you can design frameworks to respond decisively. Investors who build systems for uncertainty often outperform those relying solely on intuition, because they transform unpredictability into measurable opportunity. Oprah Winfrey, though not a traditional investor, leveraged crises in her media career to expand influence and control. When networks faced declining ratings and economic pressure, she negotiated ownership stakes and creative freedom, turning turbulent times into leverage for growth. The lesson extends beyond finance. Crises create negotiating power. When others are fearful or distracted, bold moves can secure advantages that are unavailable in calm markets. The ability to act decisively when others hesitate is a defining trait of successful opportunists across industries. Jeff Bezos faced numerous crises in Amazon's early years, from technology crashes to liquidity shortages. Each challenge tested the business's survival, but Bezos used them as pivot points. Supply chain disruptions, financial pressure, and market skepticism forced Amazon to innovate rapidly, cut inefficiencies, and build resilience. Crises weren't setbacks, they were accelerators. The lesson: adversity forces focus, prioritization, and operational improvement. Investors and entrepreneurs who approach problems as opportunities gain a structural advantage, because every crisis reveals weaknesses that can be corrected before competitors respond. Richard Branson offers a different perspective, turning global crises into ventures. During economic downturns, Branson capitalized on undervalued opportunities, like acquiring struggling companies or launching new initiatives when others hesitated. Branson's philosophy demonstrates that timing is critical. Crises create gaps in the market, and those who act quickly can capture outsized returns. Hesitation costs more than risk during turbulent times. The lesson is clear: when fear paralyzes the majority, bold action can accelerate growth beyond what calm conditions allow. Cathie Wood, the founder of RK Invest, has repeatedly leveraged market disruptions to capture long-term growth in innovation sectors. She views crises not as threats but as catalysts for adoption of transformative technologies. The 2020 pandemic, for example, accelerated investments in genomics, AI, and electric vehicles, and Wood's fund positioned itself to benefit from these rapid shifts. Her approach highlights that crises often accelerate trends already in motion. Investors who can identify which shifts will gain momentum under stress can turn volatile environments into exponential opportunity. A lesser-known lesson comes from Howard Schultz, the visionary behind Starbucks. During economic downturns, Schultz focused on refining operations, improving customer experience, and expanding selectively. He avoided the temptation to cut too deeply or panic, understanding that long-term brand value was more important than short-term profits. Crises revealed inefficiencies and forced innovation, which later positioned Starbucks to thrive when the market recovered. The lesson: strategic patience, not short-term reaction, often creates the most enduring advantage during turbulent times. Elon Musk has repeatedly demonstrated that crises are opportunities to disrupt industries. During Tesla's early production struggles, Musk risked personal capital to save the company. The financial crisis of 2008 made fundraising nearly impossible, yet Musk seized the moment to restructure debt, focus on product efficiency, and emerge stronger. Musk shows that calculated risk during crisis can transform potential disaster into unprecedented advantage. The lesson for investors: fear-induced withdrawal opens doors for those willing to act boldly but intelligently. The first-mover advantage during crisis can define market leadership for years. Diversification is a strategy that turns crises into resilience. Ray Dalio's principle-driven portfolio spreads exposure across assets to minimize losses during downturns. Crises test assumptions, and investors with diversified holdings often uncover hidden opportunities while maintaining stability. Those who concentrate exposure without risk management are vulnerable, while disciplined diversification creates optionality. The lesson is that crises reward preparation as much as courage. You can't control external shocks, but you can structure portfolios and investments to benefit from volatility rather than succumb to it. Many investors also stress the power of contrarian thinking. During crisis, herd behavior dominates markets, panic selling, fear-driven speculation, and irrational decisions are common. Warren Buffett repeatedly buys when others sell, while short-term traders flee. Contrarian thinking requires patience, conviction, and a deep understanding of value. Crises amplify irrationality, creating rare chances to acquire quality assets at discounted prices. The lesson: doing what others fear can transform challenges into long-term gains. Calm, rational analysis in the midst of chaos often produces extraordinary returns. Opportunity also lies in strategic restructuring. Business leaders often use crisis to reimagine business models, streamline operations, or pivot into emerging markets. Jeff Bezos invested heavily in logistics and fulfillment during financial uncertainty, while Richard Branson expanded Virgin into previously untapped markets during economic downturns. Strategic restructuring transforms adversity into growth leverage. Crises force businesses to question assumptions, which, when paired with insight and courage, can lead to innovation that outpaces competitors in stable periods. Long-term vision is what allows investors to convert crises into exponential opportunity. Cathie Wood looks beyond temporary market swings to the transformative impact of emerging technologies. Warren Buffett evaluates intrinsic value, ignoring daily market volatility. In crisis, patience and foresight allow investors to acquire assets at discounts and position themselves for outsized future gains. Immediate panic or short-term thinking often results in missed opportunities. Vision transforms temporary turmoil into enduring wealth creation. Crisis-driven opportunity also depends on emotional discipline. Fear and uncertainty can cloud judgment, leading to mistakes. Professional investors develop a mindset that separates emotion from analysis. Warren Buffett famously says, "Be fearful when others are greedy, and greedy when others are fearful." Emotional control allows investors to act decisively, make rational decisions, and execute strategies while the majority reacts impulsively. Without discipline, crises are disasters. With it, they're platforms for extraordinary achievement. Finally, capitalizing on systemic change is an advanced strategy. Many crises reshape economies, consumer behavior, and industries. The 2008 financial collapse, COVID-19 pandemic, and energy crisis created entire sectors ripe for investment. Elon Musk, Cathie Wood, and Jeff Bezos all exploited these shifts. Tesla with renewable energy, RK Invest with technology adoption, Amazon with e-commerce acceleration. The lesson: crises aren't just disruptions, they're accelerators of structural change. Investors who anticipate long-term shifts gain multi-year advantages while others scramble to react. By studying these stories, anyone can adopt principles that turn uncertainty into advantage. Preparation, insight, courage, and patience transform chaos into possibility. The next time markets tumble or an industry faces upheaval, remember, opportunity is hiding where fear dominates. Investors who act with knowledge, discipline, and strategic foresight can turn crises into multi-billion-dollar transformations. Ordinary individuals can adopt these same lessons, applying them to business, investing, or career decisions. Crisis isn't just danger, it's potential waiting for the bold. Every investor featured in this documentary illustrates a universal truth: fortune favors those who act decisively when others hesitate. Crises amplify both risk and opportunity, and those who understand this duality thrive while the unprepared falter. From analyzing intrinsic value to embracing failure, building resilience, and anticipating structural shifts, these untold strategies reveal how the world's most successful investors convert uncertainty into extraordinary wealth. Your takeaway is simple: study patterns, prepare for volatility, maintain emotional control, act boldly when others freeze, and think long-term. Crises are inevitable, but they are also the greatest opportunities for those who recognize them. Wealth, influence, and lasting impact are rarely built during calm periods. They're forged in the fires of uncertainty, stress, and change. The next crisis isn't a threat. It's your chance to see beyond fear, act decisively, and turn disruption into triumph.